Welcome back, Shade Squad. Today we are going to talk about APLD stock. But first, make sure to knock out the like button in the next 5 seconds.
Do you ever just get down on your knees and thank God that you know me?
For those of you new to the stock market show, this show focuses on common sense investing by buying good companies that trend on the yearly time frame and generating income by abusing stock market patterns. So if you're tired of finance YouTubers that go blah, 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 but don't actually give you a strategy, this is the channel for you. As for APLD stock, we are going to go over the technicals, check for abusable patterns, then talk strategy, and we'll end the video with my own personal price target for APLD stock. Now that the intro is out of the way, let's talk about the technicals. Let's turn blue here on the screen and let's talk about technicals. APLD stock. So we have resistance up at 15 and as well at 1250. Unfortunately for this stock, it still has a long way to go back to 25. That was the previous high. You can zoom in here. Not even 25, 35. My bad. 35. This thing went to 35 in the past from a low of $4. So this stock has proven already, and it proved it back in 2021, it can go to 35. Maybe this time it's going to be different. Maybe this time it goes beyond 35. We'll see what happens with that. But if we're going to set realistic price targets, we would want to set realistic price targets based on what levels it's actually gone to, not just hypotheticals, right? I could easily just say, hey, we're going to go to 1,000 a share, but that's not what we're about here. We're about keeping it real. So let's continue here. So the 50 EMA here, this white line, tends to act as support as it's coming down from a push here. That's like a good buying zone if you want to use that as a signal. Tends to act as support, but let me go to the quarterly now and we'll switch over to patterns. We're looking at abuse patterns on this. So if it's a pattern that's obvious, then you know what to do. You know it's time to buy and abuse that pattern. The pattern here, there's a channel here. APLD is in a channel and it's trending to the upside. That's a very clear channel over the. This is a yearly time frame, by the way. We're just stair stepping. That's what's happening. Stair stepping slowly year over year. If this continues, I mean, at some point we're gonna go back to 35, maybe even higher. That's stair stepping action if I've ever seen it. But within that stair stepping action, you see the stock does come down back to that trendline support. So I mean, I keep pounding the table and telling people to buy under 10. 10 is a nice round number, but you know, we want to get it as cheap as possible. So under 10 is what I tell people. I wouldn't buy it exactly 10, but under 10. We'll see what happens today with Fed Powell speaking. But under 10, if this thing comes down under 10, it's a buy. Just based off of the yearly time frame. Again, I'm seeing a stock that's slowly but surely, year over year, stair stepping higher. And this year is not over yet. This year is not over yet, by the way. We're still got a few months left in the year. So, you know, we still got August, September, October, November, and December. So this could maybe even break out. Because if this breaks out of the channel to the upside, I mean, on the yearly time frame at least, we're going to 25, then 35. Now let's look at the quarterly time frame. Let's look at the smaller time frames. You can see much more clearly on the quarterly time frame. We've been going sideways here since April 1st, 2023. We've been going sideways in this channel. This channel ranges between $4 and 10. That's why I'm telling people if it drops below 10, just start accumulating. I wouldn't, again, don't lump sum. Be smart about it. Be strategic about your buys. I had some guy in my Discord load up a Mara stock at 18 and he went all in. And I'm like, bro, why did you do that? You should have just kept adding as it goes down lower. And Mora had good earnings yesterday. I made a whole video on Mora. And it's still dropping today despite having good earnings. That's a good thing. You get to buy it at a discount as it's dropping lower despite the fact that it had really good earnings. So APLD, if it comes down under 10, this is a buy. You'll notice this white line, that 50 EMA, it likes to act as resistance. It goes above that white line and always gets pushed down, always gets pushed down, always gets pushed down. Here we finally got up above that 50 EMA and it's acting as support right now. And that support is at around low 9s. So again, under 10, very good target for acquiring shares and accumulating if you're looking to play the longer term swing, which is what we're about anyways. We're not here for the 10% flips. We're here to capture 50 to 100% minimum. More the merrier. Let's go to the monthly. Again, as you go to the lower time frames, you start to get a clear picture of what's been going on. We've been trying forever since 2023 to break out above this trading range. We finally were successful. The question is this just going to come back down, or are we finally going to stay above this this trading range? Are we going to form a new trading range up here somewhere and consolidate and go sideways here between 9 and 10, and then maybe we break out and go, back to 15? Or is it just going to keep following this pattern and come right back down to 3? Which I know some of you are like, man, send it back down to 3, please. Oh, this also does have earnings coming up. So yeah, I would wait. I already told people this in my previous video. Wait until after earnings to buy the stock. Usually it drops on earnings. We'll go over, again, this is the pattern section of the video. You'll see the pattern when we go to the daily. But for right now, you can see very clearly on the weekly as we go lower, like the stock really is trying to hold above this trading range. It really is trying, but we'll see if that actually works out. Earnings is really going to dictate whether we go lower or what. And Powell's speaking as well, so we got the double whammy for this stock. So we look at the daily time frame, we look at the patterns here. Earnings, big red candle, dropped it from 470 to 340. This earnings right here dropped it, big red candle. You can see very clearly another big red candle from 9.5 to 8.45. Not a big drop, but a drop nonetheless for earnings. Another big red candle. I can just keep going on. Every earnings this thing has had recently has caused it to drop like a whole dollar. Which, funny enough, if it drops a whole dollar today after earnings, it would just send it to like low 9s, which is where we know on the quarterly time frame, that's where support is, based off of the 50 EMA. Isn't that funny how that works? So, and with regards to strategy, let's move over to the strategy section. The strategy here, again, I always tell people, stop trying to time bottoms. I've had too many people who have this mindset of, I want to time the bottom perfectly. And not only that, they want to time the bottom perfectly and time it just so that as soon as they buy, they're in the green immediately, and immediately they get the 50 to 100% pump, which is like, I call that the double whammy. Like that's just crazy. So you want to time the exact bottom just before the big, pump. So you basically want to buy the bottom and want it to immediately pump 100%. That's basically what people want. And so the problem with that mentality is you go all in, because you're afraid, like, oh man, if I don't go all in, I'll miss out, because I'm gonna buy the absolute bottom and it's gonna pump as soon as I buy. And then when it goes down lower, people end up kicking themselves, because they're like, oh, I don't have enough, extra cash now to add as it goes down lower, because I lump summed everything. So I advise people to, like, it's okay if it runs away from you, but use a starter position. Add 100 shares just to start. And then add 100 more as it goes down lower. You have your levels here. Let's just draw out the horizontal support here at 9. 9 is the big level coming up. If it drops there, then look, honestly, just keep I would say keep adding as it goes down lower. Every dollar that it goes down lower, add another 100 shares. If you have a bigger account, then add whatever, the equivalent would be. 200 shares at a time, whatever the case may be. This has been profitable. If we zoom out again on the weekly time frame, if you know it's in a trading range, then I don't know what to tell you other than if you keep averaging down as it goes lower, eventually it comes back up for you and you can take profit and make 50 to 100%. And you could have done it again here, and it came back up for you. And then it went to the top of the range again. And rinse and repeat. This pattern has been repeating for years now. Again, if you're trying to time the bottom perfectly, yes, you could sit here and wait to see if it comes back down to 4. But what if it doesn't? Then you're just sitting there on cash doing absolutely nothing. Whereas you remove all that nonsense of having to is it going to come down here or not? You know what? Just add a couple hundred shares as it goes down lower. If you truly believe in this, then what's the problem? Again, the problem is you just want to time the bottom perfectly and want to immediately be in the green right away. You want to time the pump too as well on top of that. Again, that's if it was that easy, we'd all do it. The next best thing is to just, hey, I believe in this. I'm going to average down as it goes lower, starting at $10 and under. Because obviously you don't want to start averaging down from the top. That's just silly. You never want to chase because you'd be holding a big bag up here and averaging down. You always want to start averaging down from a cheaper standpoint, from a cheaper price. So price range, like buying right now, you're getting a 35% discount. But if you wait for 10 and under, for 9 specifically, you're getting a 40% discount. So you always want to wait for it to be discounted 30 to 50% and then start accumulating. If that makes sense, right? Because you should love discounts. Who doesn't love discounts? I think the stock market's one of those. The stock market is weird in the sense that I've noticed people hate discounts. Like, oh no, it's going down. Oh no, it's over. It's so weird to me. Like people don't they hate discounts, which is like if you went to go buy your groceries at Walmart, you wouldn't be like, oh no, I don't want a discount, Walmart. No 20% discount for me. No triple 10 or on any of those codes that you use for online delivery, because I don't go to physical Walmart anymore. That's just silly. I get things delivered, but like you wouldn't complain about a discount, especially with today's prices on things. You wouldn't tell Walmart, no, please charge me double. Please charge me. I want to pay a premium on my groceries. You wouldn't do that. You would be accepting and welcoming of the discount. For some reason, in the stock market, people aren't that way. They're more. Their mindset is just like, it keeps going down. I hate this. Please go up. Like you want discounts so you can buy cheap and capture those big percentage gains. I know it's preferable that things just go straight up. I get it, but that's not how the game works. You can see very clearly. Loves to fluctuate up and down, up and down. As Jerry Seinfeld said, he got fluctuated out of his money. You got to be more like George Costanza. You know what? You ride it down and then you ride it back up. Anything AI robotics, long term, is going to be a winner. In my opinion. As for my personal price target, drum rolls please. That is right, ladies and gentlemen. JP Shades here. APLD stock, price target of $25. I wanted to say 35, but I think 25 is a good number to shoot for. It's much more doable than 35. We've been to 35. If we can go to 25, I think that would be, like, you would be happy there. That's a nice 100% plus from current levels. If it drops lower under $9, you're getting a bigger discount. That's all that means. So longer term price target $25. I think that's very doable. Again, we're going for what's doable. We can set unrealistic price targets and go for $1,100 a share, but let's keep it real. $25 is a nice number to shoot for. We're shooting again for 100% return, doubling your money. And if you can do this a couple of times using this channel, you're going to grow your account pretty fast in terms of number of trades you have to take. In terms of length of time, it might take a while, right? Because we're going for the big swing. Big swing means it might take a couple months to play out, but you double your account. That's better than constantly taking these 10% flips or 5% flips that these people do. It's always better to go for the big swing. And a lot of the time you just have to sit back and wait. Alright, that's it for this episode of the Stock Market Show. Patreon.com/shadesandtrades if you want to join the Discord for trade alerts. Thank you guys for watching, and I hope you have an amazing day. Take care, guys.
MACD's crossing, I take my chance. Risk is managed, I let it dance. If it breaks below, I cut it clean. No room for hope, I trade like a machine.